embarking on a quarter century of excellence.
Hey guys, good afternoon and welcome to this very special show on what is a very special day for us. I'm Pavitra, with me is Sonal. And Sonal, it is a good time. We're going to get a market conversation going on where things could really be headed from here as well. Because as we celebrate our birthday, the market is also hitting new highs. Even today, there's been such a recovery, right? Specifically in the broader markets and the banks.
Broader markets, that continues to be the theme. We've been talking about it ad nauseum, right? Yeah. That mid-cap index has hit a new high, and that's been happening for a number of trading sessions. It's the 25th day of an up move for the mid-cap index. It's up around 256 points, though the benchmarks, they've come in for some breathers. So that is something which is expected after the stellar rally that we've seen. But yes, we have a special chat lined up. But before that, we would, of course, like to thank all our viewers and everyone behind the scenes as well as we celebrate 25 years of delivering news you can actually use. So let's get going with the conversation.
Oh, absolutely. Let me invite our guests on the show today. We have Harsha Upadhyay joining us, President and Chief Investment Officer for Equity at Kotak Mahindra AMC. Harsha, it's a pleasure to have you on this show. And first off, let me thank you for joining us on a day which is, a big milestone for us. So thank you for taking the time today. And not just today, all through the years, we've had the pleasure of being able to host you. So thank you once again for joining us today.
My pleasure. Congratulations on completing 25 years of business news.
Okay, thank you very much for that. But, let's talk about the markets because like I was mentioning, the past 6-7 days, we've seen a 1,000-point rally, right? Ever since the state election results came out. How do you see things moving from here? We've already seen this big win come through. It seems like all of the stars have aligned for India. But if you were to take your bets right now, where do you see the big opportunity in terms of if you're investing right now?
Clearly, many things have turned at the margin in the last couple of days in terms of election outcome that was better than what market was anticipating. Similarly, the second quarter GDP as well surprised markets. And we have also seen in the run-up to MSCI rebalancing and thereafter post-election results, foreign inflows into Indian equities continuing. So overall, I think everything seems to be turning a little positive in the last few days. Having said that, we should also remember that valuations are at a higher level, especially for mid and small caps. We are not so worried on large cap valuations, but definitely on the mid and small cap, the valuations are slightly beyond our comfort. So if you are an investor who is looking at the next 3 to 5 years, I think these are also reasonable periods of time where you can make staggered investments to create wealth. However, if you are expecting markets to extrapolate the kind of returns that it has given in the last 6 months or last 1 year into the next period, that may not be a wise decision. So to that extent, we could expect a little more volatility in the coming few months. And also as valuations go up, the risks also keep increasing. So that should be kept in mind.
I was actually going to ask you that next. Valuations, where do you see valuations going ahead or what levels do you see them at? Because mid-cap index is at another high for the day, yet again, 25th day of highs for the mid-cap index. But having said that, we are seeing a lot of additions to the demat accounts as well. In the month of November, the net additions came in at 2.8 million. So the primary activity, the activity in the secondary market is, of course, keeping everyone very interested. But Harsha, the recent rally has been fueled in large part by the large caps. You did speak about how you're comfortable with the valuations there. But do you think this is the space where a new investor should, find some sort of interest? Because we did see in the month of October as well that flows to large caps came back. Do you think that is a trend that will continue?
We don't know yet about that change in trend because as of now, we are seeing more flows coming into mid and small cap category at the mutual fund industry level. However, as I said, there is a little bit more comfort in terms of large cap basket on the valuation side. And also, these are the businesses which have withstood various cycles in the past. So definitely, one should have an exposure to large cap segment as well. And especially those investors who are coming into the mutual fund segment or into the equities for the first time. For them, while it may be very, very enticing to look at mid and small caps because they've given very, very strong past returns, especially in the immediate past. They should also remember that the easier way to approach market with the lesser risk is from a large cap segment. And that's where we would probably suggest investors to have a slight bit of tilt within their equity portfolios.
Okay, so maybe a large cap tilt is preferred at this point. Harsha, we were speaking about valuations in the mid and small caps. Are there pockets that you believe are completely in euphoric territory? Is there anything within the space that you would avoid right now for the simple reason that it's run up too much, it's too expensive?
Sectorally, we are not finding those pockets yet, but definitely there are many stocks which are beyond our comfort in terms of valuations. And many of them are not in the portfolio, and wherever we have some exposure, we are also looking at moderating such names in our portfolio. And at the same time, we do not want to increase cash in our portfolios. We are still constructive on the equities from a longer term perspective, and we do not use cash as a tool to manage our portfolio. So whatever we can, we will move into other segments of the market or other sectors of the market. If at all you look at the overall market and look at sectoral valuations, I would say probably banking and financials and pharma would be two segments where there is still some bit of valuation comfort. Most of the other sectors are trading at either fair range of valuations or slightly higher than fair range of valuations.
Okay. We are talking on a day when we are seeing a big fall in Paytm stock price. It's down around 15% as we speak. On the other hand, we spoke to Zomato's management as well. We've seen a rise and then a fall and then it turning into profits as well. What is your take on new age companies? Anything that you would like here? Some of them are talking about profitability. They have seen that in their Q2 numbers as well. How do you look at that entire space?
Clearly, just like how you analyze traditional businesses, you need to differentiate various businesses even within the internet space. I do not think that you can compare all of them and have a valuation range or analyze them based on just because they are using internet as an enabler to their business. So clearly, the companies which have been using their capital efficiently, which have been kind of showing growth which is in line or better than market expectations, are the ones which are likely to get better valuations or kind of a positive sentiments around the companies from investors. So to that extent, we will be looking at the underlying business of all these companies and then picking for. We do have exposure to some of the names in the space. However, each business is different, as I said, and we will have to look at that separately. And if you have a roadmap in terms of path to profitability, which is closer to the current date, then probably you'll have more comfort in terms of betting on some of these names at this point of time.
Okay, but Harsha, what about specifically for the for the fintech portion? Like we were mentioning, the RBI, after they came down pretty heavy on unsecured consumer lending, you do have now, something like Paytm telling us that they want to move to a higher ticket size, but that is the area where the banks are there, the NBFCs are there as well. So does that alter your view on, on some of these fintechs? Do you think that that is something you would avoid for now?
See, within banking and financials, clearly we have been preferring names which have diversified business model, which have been large in size. And these are some of the names which will give you comfort even if something goes wrong in the industry. I do not think that there is any big asset quality issue that's in front of the industry. Having said that, yes, there have been some segments where unsecured credit has gone. And if there is some excess that the regulator is seeing and which we are unable to see, one should be cognizant of that. But at this point of time, within banking and financials, we would definitely prefer larger banks and also NBFCs, which are more diversified, not just looking at the one or two single verticals of business, because that's where you will have stability in terms of cost of funds, and also the diversified book allows you to not take undue risk in a single category. So I think those are the business models that we would prefer at this point in time.
Okay. This is on the banking space, and there has been a lot of positive commentary around this space as well. I have to ask you on chemicals, because specialty chemicals, that was one space that did really well in 2022. But come 2023, companies spoke about destocking. They spoke about channel inventory issues. They also spoke about lower prices and China dumping. Do you think the worst is over? Because the commentary has been quite mixed, so to say. Is this something that you would look at in 2024?
The worst may not be completely over, but yes, definitely things are turning around at the margin. We have seen destocking for about 2 to 3 quarters across most of these segments. So to that extent, I think the kind of price fall that we had seen maybe is coming to an end, and some stability one can expect. And as you see some movement in terms of inventory building once again, I think that's the time when you will start seeing more interest in some of these names. But yes, from a medium to long-term perspective, if you analyze some of these specialty chemical names, I think the valuations have corrected quite well. As you rightly mentioned, maybe for a good 4 to 6 quarters, they haven't done much. They have consolidated at around the current levels of valuation. So definitely a good space to look at in 2024. And I hope that 2024 is going to be better than 2023 in terms of stock performance, given that probably we are towards the end of the stocking cycle.
Okay, Harsha, it's been a very interesting conversation with you on these different pockets of the market. Thank you very much for joining us, taking us through your call on where things are headed, as well as how you would approach the market now. Thanks a lot for joining us on this very special occasion. We do need to take a short break now, but the markets are, like you said, it is all in the mid caps. It's a 235-point gain that we're seeing right now, 450 points from the lows.
Yes, and pockets doing really well, and we did mention some of them. But take a look at the energy index. Nifty Energy is up 0.7%, and this is at a time when we've been talking about energy stocks or the energy prices seeing a fall globally. But yes, that is one which is doing well in trade today. The CPSE index as well doing well and contributing to the gains that we are seeing. We'll do one thing. We'll slip into a quick break. On the other side, we'll get you excerpts from a conversation with KV Kamath, Chairman of National Bank for Financing Infrastructure and Development on Indian economy. Stay tuned.
CNBC TV 18, embarking on a quarter century of excellence.